ticker symbol CEOS could be a stupid good play. Let's go ahead and go over the details now. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a CEOS raw price action and technicals thread of analysis on this fine Sunday night. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's dive right into the charts. Okay, so yes, we are looking at CEOS on the 5-day chart here. And now the 5-day chart, why am I looking at it in the macro perspective? Because we are building this huge ascending channel. Now, this touch at the very bottom down here of the support of the channel is actually a very bullish thing. Okay, so we have actually rejected that support and now we're continuing to the upside. Okay, usually that test number 3 of an ascending channel usually actually makes the asset capitulate past the support and then continue on to the downside after a resistance confirmation, right? And then it'll continue to the downside. This is a bearish setup in all in all. But there are an enormous amount of signals that are actually pointing towards the upside pretty aggressively for CEOS. And let's just dive into the next chart and actually look at those potentials now. So, sorry if you can hear that airplane outside. I actually had to open up the window as I've been in the studio all day. Okay, so all right, so this is the daily chart. We are looking at a broadening descending wedge. Okay, so this wedge is usually a bullish formation and signals a reversal of sorts, right? So that we can continue to the upside based on the validation of this formation itself. Now, as you can see here, we've already done 4 tests of the golden rule of 3. Okay, usually the golden rule of 3 is 3 tests of the resistance followed by a capitulation and then a true attempt at breakout number 4. Okay, now I have mentioned before in this channel and also on the Discord to the members that number 4 is the typical breakout point, right? So that doesn't mean that number 5 isn't. So now it's actually attempting to do that true breakout on test number 5 with an aggressive green candle here. Okay, huge buy pressure coming in. If you can take it, actually, you know what? I can just make the volume profile just a little bit more visible. I typically don't like to leave it so visible as it's not so pertinent to everything that I do, right? It's only sometimes in formation analysis and also sometimes when I'm looking at things like this. Okay, so in this case, yes, you can actually see we have huge buy volume coming in, and this massive daily candle has not returned anything from which it has gained, suggesting a continuation to the upside very aggressively based on the candle structure itself. Okay, so what can I see here? Well, I have several targets for us to look at. I'm thinking at the very minimum, this is a very discretionary way of telling you, by the way. Okay, so at the very minimum, I'm looking at a touch almost in the immediate or the short-term time frame, right? Maybe 1 to 2 days, even the next trading session tomorrow. We could very likely see a touch of 2 cents, okay, 227 at the 1.618. But with the aggressive buy volume that we're getting, FOMO is bound to get triggered into this, and we can actually see even a touch up to the 2.272 at 266, which is 2 cents, 266, and the 2.618 at 286. Okay, so 0.286 cents. All right, so if there is FOMO applied to this, a psychological component can actually thrust this further. Okay, now if I'm being very clearly, I see these 2 targets being very likely to being reached fairly soonish. Okay, now the least likely target, but it's very possible as well, is actually the 4.618 and the 4.236, and that is between. Let's take a look here. It's hard for me to see. That's 383 and 405, so just about 4 cents, right, before a retracement, and then we would actually have to come back and confirm our newly converted resistance into then support before continuing on to the upside. Now, please remember that the overall take profit for this formation is usually found per the playbook rules at the genesis of the formation. Okay, so that's signaling about 5 cents, 5.47 to be exact. I'm not saying that it's going to go there. I'm just saying that that's usually how this formation is traded. Okay, so if you know the playbook rules, you know them, here they are. Okay, so now let's go ahead and move on to the next chart to just validate our upside in the first place, right? So we're going to look at the divergence chart here, particular to the RSI. So divergence is the opposition of price action versus momentum, and in this case, momentum represented by this indicator RSI, relative strength index. Okay, so what we're looking at here are actually several, and these drives are actually all stacking up. I haven't even taken into account every single one of them, as I still am looking at more, but we have stacked, I mean, so many drives of phantom regular bullish divergence. Okay, so this is what you're looking at right here. So these are several drives, and I actually can see one right here. I can see another one right there. I can see another one right over here. Several drives happening. Okay, actually it would be more like this one right over here. But yeah, and that would be a hidden drive of bullish divergence. So yeah, there's a lot of stuff stacking up, and as you can see here, the 14-day moving average represented by this pink line is suggesting a massive aggressive upside. Usually that I don't usually see this like that. Okay, now another thing is that look at the pivot on the RSI signal. This thing is literally saying I'm continuously not gonna ever stop for bears. Okay, so so let's go ahead and now open up a multi-pane, as there are some very interesting facts to look at within a multiple time frame view. Okay, so I'm just gonna go ahead and open up this diagram here. As you can see, these 4 zones are located right over here on the live chart, and I will be speaking of these zones quite often, so it's just for your convenience to know what I'm talking about. Okay, so we're going to start it off just like we do always on the 30-minute immediate short-term time frame, and you can see here that the RSI is suggesting a continuation to the upside quite aggressively. The moving average is below us, which is very good. We can always use that as support in the event where we do face some type of sell-off. So this is looking very good. We're very well in the grips of the bull strength percentile here, and we are definitely not in this shallow area where we can actually experience a pull right back down to the prior zone. In this case, we're definitely right smack in the middle of it, suggesting a continuation to the upside quite aggressively. Okay, so now the bi-hourly time frame has been using the 14-day moving average. The RSI has been using the 14-day as a form of support and a guide towards the top. So this is now sitting very well in the grips and in the deep area of the bull strength percentile, suggesting now a gravitational pull right into the overbought percentile. So this is looking very strong. Okay, so now the 6-hour time frame also with an aggressive upside. We have been using the 14-day moving average as a pivot, or I'm sorry, as a point of support before continuing on. And as you can see here, we have now entered into the bull strength percentile. Always mind your position of your RSI signal. Okay, in this case, we're just surpassing. Okay, we're just surpassing the shallow areas of the bull strength percentile. Okay, so if we were still within that shallow area, we can actually face this type of price action here. Okay, so where we're literally being gravitationally pulled back and forth until something happens. Okay, so we definitely don't want to be stuck in these the deep area and the shallow area of the prior zones. Or the bonding of the zones, right? We don't want that. Okay, so now let's look at the 12-hour, as we already saw the daily as the divergence chart. 12-hour is now entering into the bull strength percentile. It is in that shallow area, of course, and we can always face some type of rejection here, but seeing that the moving average is suggesting a continuation to the upside and the pivot is quite aggressive on the 12-hour, the continuation to the upside is very likely. Okay, so now let's go ahead and just look deeper. Okay, this is the bi-daily. Bi-daily is now at the junction between the bear weakness percentile and the bull weakness percentile. Okay, moving average is now pivoting towards the upside, and it's very aggressive, suggesting to the upside. Okay, as long as we do maintain ourselves just shy of the bear weakness percentile, the gravitational pull will be likely. Okay, so this is already looking like a multi-day continuation to the upside. Okay, so now the 3-day time frame has already moved outside has already moved outside of the bear strength percentile, moving average suggesting upside now, and we're still pivoted aggressively and now in the middle of the bear weakness percentile. Okay, so this is actually pressuring the bears out. We're about to continue on to the upside on the 3-day as well. Okay, so now the 5-day is very good too. The 5-day has now made a bullish cross above the moving average, which is a very big deal. Okay, it has now pierced right into the bear weakness percentile. Okay, so obviously there's always that risk here, staying in the deep area of the bear weakness, because we can always come back. But please know that we do have now, finally, we do have this 14-day moving average below us, which can serve as a form of support before continuing on to the upside, but it's not suggesting that thus far. The weekly time frame with just massive strength, making a bullish cross over the 14-day moving average, which is great. Okay, now that we're here just shy of the bear weakness percentile, we're about to be pulled right into the following zone. Very good things here, very good things. Bi-weekly still suggesting upside, monthly still suggesting upside. Guys, this is gonna be a kind of a choppy road up, but it's gonna be up. Okay, so that's what the charts are saying. That's what I'm looking at thus far. Please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I can't actually suggest for you to buy or sell any assets. Okay, I need you to do your own DD and everything will be just fine. Okay, so we can actually see areas of confluence here. So, for example, if we're looking at that top target of about 5 cents, 547, we can actually draw that right over here and see where that actually lands. Okay, so I think 545 is close enough. So let's just go ahead and make a trend line here. And as you can see, by making the full move of the broadening descending, by realizing the entire play of the broadening descending wedge, we're actually landing in confluence to a lot of zones that have been used quite often throughout the entire trading history of this thing. So you can see right here, support, resistance, support. I mean resistance, support right over here, support. Man, resistance. You can see so many areas of interest here. Okay, so this is very much an area of inflection, or a point of inflection. Okay, so I'm not sure that we're actually going to pierce through this area here, but very likely from the 547 area, if we do reach that, we are actually very likely going to see a pullback. Okay, so and also, I mean, just know that this is looking super good. Okay, so a very good call from a friend in the YouTube chats. His name is Abner Cruz. He actually requested for me to take a look at this for him, and this is what I can consider to be maybe an A+ trade. And I usually don't say that. I usually do not say A+ trades. Okay, so this is looking very good. A lot of discretionary traders, a lot of conservative traders will wait for the pullback from either the 3-spot 618 or the 2-spot 618 to come back and validate the newly converted resistance into support before a continuation to the upside and before entry. Okay, know that that is a strategy as well. People do not fall into FOMO. I'm talking about pros. Okay, in this case, we are very close to that resistance level, so there are several obstacles to actually take into account here, because we may very well find the resistance here, somewhere between these three ranges. We'll come right back down, even test our current highs, and then validate our newly converted resistance into support, thus allowing a safer entry point at about 191 to 2 cents, maybe even 205, right around there. But aggressive traders will usually take this entrance here somewhere. Okay, so again, you guys, if you want to reach out to me, don't hesitate to do so. The Twitter and the Discord links will be included in the description below. I have been accepted into the affiliate program for TradingView software. So if you do sign up for an account, which the link is included also in the description below, it'll also help my trading future out pretty greatly. Okay, you guys. So yes, with that said, I think that's pretty much it for the video here. I wish you well. I wish you a very good night, and I will actually catch you at the bell mañana. Adios.